You had a Fed statement today, which I think initially the market took as being more hawkish. All right, let's cover it. So they introduced some new language today. They said that quote unquote the near-term risks have diminished. All right, so let's unpack that. That's quite a statement. The statement, in my view, just means that we're through Brexit. The markets have been holding up. But more importantly, that's really what the media picked up on. But more importantly, what that statement means is that the economic data that we've gotten through is still not good, but takes the risk of an immediate recession off the table. We were very close to one. If you remember the GDP numbers and the jobs numbers, that not this past reading, but the reading before, were terrible with revisions down, and that these last set of data has diminished the risk of a recession. That's really what the Fed meant to say. That, of course, they are not always the most straightforward of talkers, but that's why you tune into me to translate. So the Fed basically just said that things aren't good, but the chances of an immediate recession are off the table. That's all it meant. So was that hawkish? It was less dovish, but it wasn't hawkish. I don't think that they were setting the markets up for a September rate hike. I know there was a lot of talk about that. Again, let's go over this. I know that I do get new viewers. I always just assume everyone watches everything I post every second of every broadcast, but I know that's not the case, so I find I repeat myself a little bit just to hit those people who don't catch it. So there's three steps here. Of course, there's hawkish and there's dovish, but in between there's the switch. The Fed hasn't hit the switch yet to kind of neutralize things before they go to the other extreme. I would say that they took a step toward the switch, but they haven't hit the switch yet. Yeah, so that's my view. I think that they set the market up for a December hike, and I do think that that is still on the table if the markets are at highs. That just seems to be their MO these days. I don't think September's on the table. I think the market got whiff of that. Again, I saw my favorite geniuses out today talking about how the TLT is rallying and that's terrible for the market and bonds and stocks can't go in the same direction. Oh boy. These people at this point are just beyond my help. There's a model that's used to evaluate stocks on Wall Street. It's widely known. It's taught in every finance class that I ever have taken. And believe me, I've taken many, considering I have a finance major. It's known as discounted cash flow valuation, DCF. Again, I want to just keep it very simple math. Think about a simple division problem. You have a numerator and a denominator and an end product. If you have keeping the top number constant, if you have a denominator that is smaller, your end product is larger. If you have a denominator that is larger, your end product is smaller. Very simple. The interest rates, the TLT in this example, is the large component that goes into the bottom number. A rallying bond market, or a bond market that stays high, keeps interest rates low, which means you have a larger end product in the end. Very, very simple. The confusion comes in when there are large spikes to the upside in TLT because people view it as a risk-off instrument. Why would a large spike in the bonds be a problem, mind you? Meaning that the lower number, the bottom number is contracting even faster? It's because the fear is that the top number is also shrinking when you get the large spikes because of the fear of recession. The Fed just told you, though, the near-term risks have diminished, meaning there is no recession, meaning top number stays the same, bottom number goes smaller. End product, larger. Very good for stock prices. Very simple, very straight to the point. You'll never hear that analysis anywhere else that I have aware of, but I assure you that is the absolute correct one. So lower interest rates, lower for longer. That's what's happening here. Okay, why do I think the Fed also won't rise? Janet Yellen is a Democrat. Hillary Clinton is a Democrat. They're both women. All right. I know that might not be politically correct, but that is a fact. Whether or not the Fed is politically influenced, I don't know. Maybe. All right. So that's the story with the Fed. I don't really think we need to go. I'm just reading some of my notes. All right, that's it. I don't want to go over the Fed anymore. That covers it. They're not hiking in September. It's probably a December hike. The other news du jour today is Facebook. I'm just debating if I want to talk about some of the. Yeah, I want to cover one more aspect with the employment numbers. Everyone was excited with the last employment number that went higher, that took the recession risk off the table. The only fly in the ointment, and this is what I keep this is like a constant theme for me. The wage inflation is not present. That's really what the Fed, when you start getting hot employment numbers like you used to get in the 90s or whatever, there was wage growth. People were being paid more. That is the sign of inflation. Not the case. Waiters, waitresses, carnival ride operators, they don't get paid a lot. With the reaction of the market, you'd think that, I made the joke that taking home a carnival ride operator and introducing him to your parents is like bringing home a lawyer or a doctor these days. It just means to me that the job market is stagnant. There's no wage growth. If you start seeing large swaths of wage growth, that's when you got to start worrying about the inflation picture changing. And based on all of the data that I've seen, that is not the case. So we'll leave it at that. Facebook. I don't know how many times I could say this. I've been fairly bullish on the stock for a long time. We talked about some upside targets. I talked about the pattern playing out, that it would go sideways, have a bit of a freak out, get to trend and to the gap fill. It did that. I talked about in real time that being a buy point. I also talked about fib extensions. The ones I had mentioned were 128.55, but the one I was looking at was 130.43. We are there. Book some, Dano. This is the spot to sell some Facebook if you've been long. The stock can go higher, absolutely. However, we are on the wrong side now of the progression line. We are above it. Moves above it can sustain for a little while, but over the course of my following Facebook, over the longer term, that it cannot be sustained. There is also another line that I have not made privy to people yet, and I talked about on Twitter, selling in the 131s. Between 131 and 132 is roughly the other line. I believe this area is a good point to book some profits. The stock ran from the low of 108s, which was the gap fill, now up to the fib extension. I think it's going to chop. You could have a couple of more, points to the upside. I think it's going to go sideways. I absolutely think that this is a fantastic area to book some profits. As far as Facebook's earnings report goes, I took some notes on it. They crushed the EPS. Their revenues were good. I heard a lot of people talking. This was some of the bear nonsense that was out there, that people were playing Pokemon and that they wouldn't be using Facebook and that they were using Snapchat over Facebook. Let's unpack those two things. Pokemon, sure, it just means to me that they're using their phones more and probably were logging into Facebook in between and sharing their progress and so on and so forth. I saw that as a bit of a red herring. Snapchat, on the other hand, that is real. I do think that they're picking up market share, but the piece of information that I guess Wall Street analysts are missing because they probably don't use these products is this. And this is, again, a piece of proprietary information and analysis that you will not hear from other people. That's probably why I've been the one who's been right on Facebook. Instagram. That was an amazing acquisition before Facebook. I believe it was right before they came public. It was for about $1 billion. I've seen estimates that it could be worth anywhere between $35 and $50 billion plus as a standalone. Here's the interesting piece of information about Instagram that the analysts are missing. People, in a crappy jobs economy, have turned Instagram into a means of monetization. If you are a model, a very attractive female, and you want to get work, you have to have an Instagram account and you have to have 10,000 or more followers. That means you have a bunch of hot chicks on Instagram posting photos. Wish I had that growing up. That is the fact of Instagram. It is that isn't debatable, by the way. I have friends of mine who are models who have told me that they're bookers and that their agencies have told them to get on Instagram, post a bunch of hot photos, and get up to 10,000 followers. That is an indisputable fact. That is something that is not happening on Snapchat yet. So that's the story of Instagram. It is being used that way. We all know, anyone who's ever gone out to a nightclub before, and I used to work in the nightlife industry, if you get the girls, you get the guys. Done. End of conversation. I just explained to you the appeal of Instagram in a few seconds that you will never hear on television. Very, very simple. Facebook is reaching some upper targets. Longer term, of course, I am still bullish on the stock. Yeah, someone was asking me what to do with Facebook here. I would just trim. If you have some shares, I would trim it. If you want to hedge a little, you can sell some calls. That's fine. We all know that Facebook tends to go sideways for a bit, so I would assume that on the gap they'll get a bit of a shock, and then that obviously that vega of the call, which is the implied volatility here, is going to contract. So you'll have that going for you plus theta decay. I would use that to book some. IV will contract substantially on Facebook. It was only in the 42% IV percentile. It could get really low on Facebook tomorrow. I would be looking to buy, if you want to hedge it, you could buy some puts or put spreads or what have you as a hedge. Again, longer dated, not in the weeklies. This is all longer dated stuff. What I would sell, though, calls, if you can get in the weeklies, get some premium here, yeah, book some. Sell it. Why not? I like that. If you're in a position of weekly calls, I know that you guys do this and don't listen to me. It's very frustrating, but I know there are people now in weekly calls. The problem for you tomorrow is that a lot of people played Facebook long and have a time expiration and need to book those profits. So what do you do? You can either book them along with those people, or you can roll the position out to longer dated options, like I always say, which will be very cheap tomorrow, and turn them into either longer dated calls, or better yet, longer dated call spreads or flies or whatever. I like spreads. Very simple. I would be, though, however, looking to book a little bit of profits here. What can be done if you missed Facebook? The answer is Google. Unfortunately, it moved a little bit here. Other people are obviously thinking this is the logic of Wall Street traders. Apple was up, Facebook was up, Google is up now, and it is going to likely fill the gap to 780, probably pre-print. It's probably got about another 10 points. My guess is you'll do that probably pre-earnings. So yeah, you could probably get another quick couple of points. I would do it RTH though and use stops. I took some profits in a trade. I don't want to spend too much time on it because I know not a lot of people took it, but in GSK, GlaxoSmithKline, it's moved off of the channel low. It is now kissing the channel high. It could go a little bit higher. The last reference I have on GSK, last swing high was 45.49. We are right into the channel. Technically, today was a breakout, but I'm looking to book some profits in that. I'll look to reload on a pullback lower, but I'm out of that trade now. I booked it up near the end of the day. So that's GSK. Some good housekeeping here. The PayPal, that is kind of acting it got up to my target. I talked about it in the channel high in after hours. It's now just chopping around. It stopped right on the 61.8, that 36.32. It's probably going to be under pressure for a little bit, but I think that you could start buying dips in that stock. The channel low is roughly around 34s, 35, so I think between here and there, you probably can nibble a little bit. I do think longer term the stock is going higher, but right now it's if you can't go higher on earnings right away, it has a little bit of consolidation to do. Just checking off the ones that we talked about here. PayPal. Yeah. All right. What else reported? Whole Foods quickly after hours reported they were a little bit of a miss and a bit of a guide down. 29 to 31 has been that area. I think that they're just reorganizing their business. Honestly, with interest rates where this is, these guys should be looking to do an LBO and get this out of the public markets. It would be a great buy, in my opinion. They generate a lot of money, and I think that they could do better if this was a buyout, leveraged buyout as an LBO. It means you finance the buy with debt. Interest rates are nothing. I'm sure they can get some private equity guys in there to buy it. I've for a while thought this. It hasn't happened yet. If this stock gets cheap enough, I think it will happen. I don't know. This is just one that's going to chop for a while. I have a small position in this just for that kind of a turnaround, but nothing really much to see there in my opinion. If you could get above 34 tomorrow, the stock will probably go higher. All right, Apple. Let's talk Apple. I saw a lot of people posting about this. There seems to be a lot of misunderstanding. Apple did break the downtrend. Some people said that it didn't. It did. The break happened at 101.80 something, 102 maybe. The problem for Apple is that it filled a gap. It got to the 61.8 and and a 200 MA, and it just found some sellers. A lot of people are booking some profits or getting their money back. If you were long Apple the last time, you've been probably hoping to get your money back, and that's what happened here. 100.72 is a big level, so if you do get a few day pullback, I don't know if Apple's going to completely fill this gap here. It's possible, you never know, but I think that would be an area if you want to play some right or right out area. If it does continue to sell off as a buy area, if you get back up above, like if Apple spends a couple of days chopping here, and you get back up above today's high, which was 104.35. The next levels that I'm seeing a lot of resistance in, 105s has a little bit, but the real volume distribution doesn't start coming in until 109s. There was another gap fill in Apple, which was 109.85. That would be my next target. The ideal scenario here would be to consolidate for a few days, hold the range for like 3 days or so, and then next week go. But we'll see how that plays out. So those are the two levels I'd be watching for on the downside and the upside. You can use today's range as your guide. I talked about Google. Twitter. So Twitter put up a goose egg today. Again, my view on Twitter is that it's really a undervalued asset that is being poorly managed. Their management is, I listened to the conference call yesterday, and to me this was almost as if they had a 42-0 football loss and they were high-fiving on the bus home because they're going to still go for ice cream after losing the game. This was one of the most bizarre conference calls I have ever heard. They keep talking about their initiatives and talking about the fact that they have new products coming out. That they did with the character count and so on and so forth. It's still not live. What is taking these guys so long? It is absolutely incredible. This to me is an example of what happens when parents with their children celebrate 7th place victories. This is ridiculous. As far as the stock goes, 1570 is the 61.8 of the range. I think that was actually basically the low of day. It was 1569. There are some reference lows here around 1540 to 1546. This really should hold here, at least for a bounce. I have a small long in this just because I think eventually someone scoops them up or they're forced to get their act together, but the stock is really a piece of crap. Sorry, and so is the company at this point. They have a great product that needs innovating. They need to become more Snapchat or Instagram, really more Instagram-like. I think that if they could compete in that arena, I'll tell you, if it's never going to happen, but if they wanted to call me and I would advise them on their conference calls, this would have been me on the conference call instead of the conference call they actually gave. So I'm gonna pretend to be at Jack for a moment. I realize hiring diversity directors was probably the wrong way to go. We probably should have hired some new product innovation teams, and we will be doing that in the future. I will personally be spearheading that. I know we're not executing well, but we will be shortly, and we're about to largely elect the next president of the United States. Twitter is a great product. We know that we need to grow our audience and expand our appeal. We had to get our house in order, and it's largely in order now, or close to being in order now, or whatever, and we will start growing users and monetizing better. That's all they really had to say, but instead they chose to ignore the fact that they had a crappy quarter and just played it off, and huge mistake. Not a fan of the... by the way, also with their analytics, I've been using their polls for a while. They should make it easier and accessible for marketers to get access to that. Like, if I ran a bunch of polls, they should have a section where you can go back and look at those polls and keep it. Instead, I have to hunt through the feed. I'm going to make that suggestion to them that they should make that a little bit more readily available. They should have it should be available in the media or something in a subsection with polls. I'll put that suggestion in, and probably in about 2 years, it'll be implemented. Yeah, they need to speed it up, and they need to speed it up quickly. This company probably should have never came private. They just can't get their act together quick enough. It's really quite sad. We all love the platform. We like the product. But, I'll tell you, I still talk to friends of mine who don't know how to use the thing. It's just, I don't know why it's so complicated for people to understand, but I guess, I think back to when I first started using Twitter, I didn't really know how to use it either, and only until I got into the trading community, that's really what got me going. Anyway, you have a presidential candidate, Trump, who's almost going to be the president because of Twitter. So I don't know why they're not playing that up. I mean, that's a huge selling point in my view. They should say that they have huge influence. All major influencers are using this, and they don't even talk about it. I mean, it's just please. I just want to. They should hand out barf bags with their next conference call. They didn't want to do Periscope because they didn't want to show their long faces, but they need to hand out barf bags. Anyway, that's Twitter. Hopefully, we shame them into some action. All right. All right, here we go. We talked about TLT. I want to just go back into that. Yeah, it missed. It actually, the pullback was a little bit shallow. 135.58 would have been roughly a half-back pullback, and the measured move, it didn't even quite get there, and now it's kind of coming back up. Above 138.50 is still looking okay to me. Keep in mind, it has a zero bound. I mean, at some point, I don't think the Fed is taking rates negative here. TLT is up a lot for a few reasons. One, you have these governments around the world and banks around the world that are doing really shitty work. What they really need is an FDIC insurance so that wealthy people feel confident leaving their money in their banks, but they don't. So what they do is they buy dollars, and that's why the dollar has been strong, and then they buy bonds because they don't worry so much of a return of their capital. They worry about a return on their capital. Also, you go to Germany, they have negative yields on their bonds. U.S. bonds look real cheap here. You have the currency appreciation and the appreciation in the bond price plus more yield. So this is like a game that's sort of searching for yield. And honestly, I would buy U.S. bonds over any other country's bonds. We all know it's a disaster over here. We're issuing way too much debt. There will be hell to pay at some point, but other people will be paying in hell first. And their debt, their blow-ups will only further inflate U.S. debt. Crazy as that sounds, that's really the truth. So, Trying not to be too gloomy here today, although we were pretty positive on the Facebook thing. We started off big, and now we're kind of back in that, backing and filling a little bit, fair and balanced, right? IBB. All right, so someone asked me about that. That's one of my big risk on, risk off indicators, and I talked about this in the weekend review video that I thought it was going higher. My concern was it could be a false dawn because it's come up from the bottom. Just like I said that coming down from the top to the low could be a false breakdown, now this could be a bit of a false breakout. Watch the 200 MA here. We did get a close above it. We need some consecutive closes over the 200 MA, and you really need to take out the range high of 289.71. If you can get above and hold over there, then I think we're going to see 206s. If there were to be a pullback, I think the 271 to 275 area will likely be retested. So that's my thinking. We had multiple days of consolidation. 1, 2, 3, 4. Wait, 1, 2, 3. Yeah, 4 days, and then today was the breakout. That's good. It's surprising given how cruddy Gilead did the other day, and I've been warning about that one a little bit. I will say this though. It's into some areas here that are important. The bounce was really minor today. 180, 189. Below, if we're below there, it's still a little bit vulnerable. The close today was 81.79, so a little bit shy. It's a cheap company, cheap stock. The problem for me is that I think that they may be experiencing peak earnings, and everyone talks about them buying some growth. When companies do acquisitions, usually it depresses the share price. I think that that's also weighing a little bit on Gilead. It had run into the print. We don't love that when stocks have been down a lot. Bit of a false breakout. I would be thinking we're right on a range low here. It's been down here a lot of times. If this goes, it's probably going to have a final flush. I know tons of people are long this. And if it loses 77s, I think it's going to see 71.17 to 70.30. What are those numbers? 71.17 is the 1.618 Fibonacci extension down from 77.92 range low to the 88.85 range high, and a half back of the entire range is 70.30. So that's what I think could happen if we lose the 77s. Yeah, if it just chops around here, I don't know. We'll have to see how that plays out. Skechers looks terrible. It gapped down the other day. It has now not been able to recover. Anything below the low of 24.10 could easily see 20.78 to 21.56. I'd probably be a bit of a buyer there just because it came down so far so fast, and that's really where the big breakout came from. I mean, the old top from way back in the day was 14.97. I don't know if it's getting there, but I'd probably be a bit of a buyer. I'd be a short on the break of the 24s, and I'd be a buyer and a cover, or a cover and a buyer, or whatever, in 2078 to 2156. Just added that one in to dice it, mix it up a little bit. So Freeport McMoran, I got a lot of questions on that. I think copper probably wants to go higher, but you can use the range from yesterday, I think, as your guide, since it was such a big turnaround off the 50 MA. I mean, 1204 was a big area. Anything above 1204, I think, can go. Below there, to me, gets a little bit more iffy. Let's keep it real simple, stupid there. Someone asked me about FireEye, not a name I really watch that often. I have a little bit long. They're reporting, your guess is as good as mine. This to me is a bit of a longer term play that they might be at some point a takeout, or at some point get a bid back up to the 27s. Down here, it's, it just seems to me like they'd be a good, like, I think I can't even think of what the term would be, but it would be a good acquisition. I think it would be better as a piece of another company than it would be on their own. Obviously, the best in the field, I think, is considered Palo Alto, but I don't know. FireEye down here seems a little cheap to me. It could get cheaper again, retest the lows, but it seems like it's trying to build a bit of a base down here, maybe for a move back up. I think I covered all I wanted to, and guess what? We're right at the 5:30 number. So let's pull a Seinfeld, right, and leave while the getting's good. Anyway, that's my story. I'm sticking to it. If you missed this broadcast or want to watch it again, it will be on my YouTube channel, which is Justin Pulitzer Trades. If you're not following me on Twitter and you like my repertoire, you can follow me at Justin Pulitzer. And I will have my weekend review video, which is the real technical, the big show. This is sort of like the follow-up, the mini show. The big show will be on Sunday. Anyway, have a good rest of your week. I hope my analysis has made your day and life better. And have a good one, and cheers.